So the next two speakers actually present something that I've never seen at a cloud show before as well. So another kind of session that I feel is unique to what we're doing here. So I'm going to bring up two financial analysts to talk about the cottage industry that's happened between all the public cloud providers and what they look at as they look at this market. So I want to welcome Dan Ives and Saeed Mia. You guys don't have any slides or anything. You're just going to talk, right? All right. Thanks, guys.
Hello. Hope everyone's doing well. So let me just give a quick intro of myself, and then Saeed could give his, and we'll sort of kick it off. So my name is Dan Ives. I'm an equity analyst at Wedbush Securities here in New York. I've covered technology from a Wall Street perspective for the last 20 years. So going back to the bubble and burst to where we are today in terms of cloud. And you know, I've seen many different maturations from a Wall Street perspective in terms of how the public markets view cloud. And you know, what I'm hoping here today to give a sort of talk and maybe even a deep dive in terms of some of the opportunities and challenges from a public perspective, in terms of some things going on in the market. And then Saeed, you know, you could sort of give your background. Obviously, you're going to hit it from the private side.
Mm-hmm, mm-hmm. I don't know if you guys have ever seen Dan on CNBC or Bloomberg, but you know, he casts a long shadow, so I'm happy just to share the stage with him.
It's his world, we all pay rent.
I'd like to think I'm the Andy Richter to Dan Ives' Conan. So hopefully we can lend a bit of a unique perspective. There's been a lot of brain power that we've encountered at the conference so far, and hopefully we can, you know, shed some additional color on what we're seeing both in the public and private markets.
Yeah, so what I'll start with is, from a tech perspective, in terms of Wall Street, I'd say probably one of the biggest themes, if not the biggest theme over the last 2 to 3 years has been investing in cloud. You've had 30 to 35 IPOs just in the last 18 months, some which have gone very good, some which were pretty well documented, have not gone that well. And I think from a public perspective and from an investor, you know, the New York City cab driver knows that Amazon and AWS is successful and leveraged to the cloud. The big focus now going forward is how do you invest in a multiple cloud environment, but really in an environment where we believe $300 billion, based on our estimates, have been spent on the cloud over the last 3 to 4 years in terms of deployment. But yeah, in a multiple cloud environment with Azure, GCP, and others, we think that's going to be 4 to 5x. And there's going to be clear winners and losers in that sort of opportunity. And that's why one of the areas that we're really focused on is, you know, looking at some of the software players, the services players that will operate in this multiple cloud environment. And I think that's something that investors are really trying to focus on. You know, there's obviously private companies like Cockroach and HashiCorp and a number of others that I think have established themselves in terms of some of the things that they're doing from a multiple cloud perspective. Some of the stats I'd give you is that today we believe only 32% of workloads are on the cloud today in terms of hybrid cloud. We believe that's going to 55% over the next 3 to 4 years. So in that shift, AWS has been successful. Everyone knows Azure and GCP. We think there's probably going to be another 10 to 15 vendors that today are small private companies that will be sort of the next torchbearers over this next sort of cloud paradigm. And maybe Saeed, you sort of kick off, because obviously I see it from a public perspective and even helping private companies, but you're obviously deep in the weeds on the private side.
Yeah, so something we were speaking about, you know, at lunch with some of the other folks here is that you'll see, you know, where public meets private, you'll see a lot of not destroying a market cap, but a reallocation of market cap. And by that I mean, you know, acquisitions, right? So you saw this in broader software over the last little while, and you've seen it in cybersecurity, and you'll also see it in this space as well, where a lot of incumbents, you know, they're caught in the innovator's dilemma. They're being caught flat-footed, and as a result, they need to buy their way out of this predicament right now. And the waves of innovation and a lot of the great things happening on the private side, those aren't going unnoticed. And so what that translates into is bigger companies paying not necessarily financial value, but strategic value for for private companies. And by that I mean, for instance, an example like AWS. If they were more acquisitive, they would be paying, outsized premiums and outsized multiples so that, Microsoft or Google doesn't acquire them, right? Like the opportunity cost of not owning those assets is now too high, right? And that's why ultimately they're driving greater premiums. The companies are also, they're just growing so much faster now that traditionally you'd have private companies being acquired off of, either trailing 12 months or their next 12 months revenues, for instance. But because they're growing so quickly right now, it's not really appropriate anymore to buy them based off of just kind of a standstill moment, but instead paying them a multiple of 7, 12, 20 times NTM or NTM plus 1 revenues, right? And that's just creating a big arms race and a lot of money being thrown at a lot of companies. And the punchline there, everyone, is that just valuations are going up. And if you look at the economy, broader economy, and everyone's saying that some of the froth is going to come off the top, that means that organic growth is slowing down, right? And ultimately, how do a lot of public companies, when their investors are becoming growingly unhappy, how do they re-accelerate growth? Inorganically, right? And so bull market or bear, you're going to see valuations continue to go up out of desperation, and incumbents continuing to kind of pay their way out of these problems and reignite growth.
Yeah, and one of the things that we're seeing, the difference versus 3 to 4 years ago, investors, these are hedge funds, mutual funds, or even on the private equity VC, they say, well, how do you play cloud? And you have 10 to 15 companies that are ways to play it. Today, that list is 50 to 60 with another 20 or 30 private vendors. And I think what's starting to happen now in a multiple cloud environment, it becomes a land grab opportunity. I talked about that spending being up 3, 4, potentially 5x over the next 4 or 5 years. There's a lot more companies going after that pie. But you're really now, in our opinion, over the next 12 to 18 months is where you're going to have the winners and losers. Because I think in this multiple cloud environment and this massive shift among enterprises that are now going from traditional on-prem to a multiple cloud environment, they're going to pick their vendors. You're going to have the services players, the application vendors, and ultimately who wins. And I think today you're going to see, we believe there's about 70 to 80 billion of private equity money and VC money looking right now to bet on plays in this space. Because it's real the wild, wild west in terms of this next phase of cloud. And that's something that we've seen. I mean, even not just today, but I'd say every day or every week we're hearing from investors trying to identify who are the sort of next winners. Mm-hmm. But ultimately there's losers because just like Saeed said, you have the traditional infrastructure players. They're going to be market cap and share donors to what we're seeing. And I think you're also going to have an unprecedented phase of consolidation. Mm-hmm. I mean, you could probably speak to that on the private side, but I think that's something that we believe you're going to see the strategic players, the Oracles, the Microsofts, the VMwares, the Palo Altos, even some of the names like Workday and some of these ServiceNow and traditional application players. But also I think you're going to have, also from a PE perspective, mm-hmm. you're going to see a lot of financial buyers.
Yeah, and you've already seen this. It's like the train has already left the station on this. And, for me as a VC investor, I'm not interested in your 2 or 3x returns, right? Like I'm interested in, the 20x returns, right? I mean, if you're looking at anything less, like you just might as well just put your money into real estate, right? And I think you've already seen the trickle down effect where folks are chasing those returns in this ecosystem right now. And a great example is VMware acquired Veriflow earlier, and it was only shortly after they raised their Series A, right? Whereas that was previously unprecedented in this wheelhouse, and the reason why is again because they're just so desperate to kind of catch up where organic growth has been slowing down, and you'll continue to see that, especially a lot of the bigger guys, like they're kind of over this point where like they're not a big fan of multi-cloud, right? I mean, it's democratized things, and instead they want to, they've kind of come to terms with it. They're no longer in denial, and they want to think, okay, well, how do we differentiate an otherwise commoditized space right now? And it's through, acquisitions on the peripheries, like, like in security or in, CMPs and BI tools and all those things. And, Dan and I, like, we even know a software company this morning that was acquired, again, because companies are just really, really eager to differentiate and disrupt the commoditization. And, to kind of park that aside for a second, the companies that will win, especially in the private and then ultimately in the public space, are going to be the ones that, again, capitalize on what I mentioned earlier, which is the whole concept of strategic value. And so there's an AI there's an AI CMP platform that my firm is actually we're investing in right now, and they've already, I mean, they're only a Series A company. They've already received 8 acquisition offers, all by blue chip tech companies. And the reason why is because they're kind of Switzerland right now. Like they're the middleware layer that all the data feeds go through at this point in time. And so as that happens, and as they go bigger and bigger and bigger, they become more of a staple in this ecosystem, right? And so all of a sudden, then they're on the map or they're on the radar of all the bigger guys who want to take greater share in an otherwise democratized, commoditized ecosystem, right? And so companies like that kind of sit at the crux or sit at the intersection of this ecosystem, ultimately those are the ones who are going to get the biggest multiples and win out kind of when all the chess pieces kind of settle on the board.
Yeah, and really, there's almost different phases of cloud, because as much as we could talk about the platform, there's going to be the services piece. And today, that's actually one of the major gaps. There's really no pure play cloud services play in a multiple cloud environment as a public player. Then you think about what's going to happen on the cybersecurity side. You're needing to protect multiple cloud environments outside the firewall. That's why traditional firewall vendors, I think that Cinderella story, could have a, dark ending, because I think you're going to see more and more spending outside the cloud, and then you're going to have the traditional application players that are going to get bigger and bigger and bigger. And I think that's something where we view cloud today as only the second, third inning of this all playing out. And I think what you're going to start to see, kind of like Saeed talked about, is multiples are going to continue to go higher. You're going to see acquisitions where companies are bought Series A, B. The days of going to, Y and Z rounds and then go to the public markets and get a 30% down round, those days are over. And that's why the other thing I'd also say is, I think with Uber and Lyft and what you've seen with WeWork, I think that was a major defining change in the private to public transition. That will affect cloud companies as well. Whereas I think a lot of these companies, they stayed private too long, took too much money, got fat and happy, were not profitable. Then they come to the public markets, and it's a weakening call. And I think that's something that's changed the way these companies now going forward are going to be built, as well as just the fundamental profile in terms of what we've seen, because the exit strategies are becoming a little more complex.
Mm-hmm. Yeah, I think Dan's point is a good one in the sense that a lot of investors, a lot of acquirers, and the founders themselves are thinking about the exit, 3 to 5 years now, which is much shorter than it was before, and then working backwards, right? I mean, this morning we saw Pensando, they were featured in the Silicon Valley Journal about all the former Cisco execs and kind of emerging from stealth mode, and a lot of these really, really smart management teams that are all of a sudden, contrary to WeWork and Uber and all those guys, they're way more capital efficient, right? I mean, they're not raising outsized rounds, they're raising just enough and doing a lot more with much less than a lot of the names that you've seen kind of stumble in the IPO markets. And that's like the last thing you want to see is a private company that needs to raise 300 million in order to get to 100 million in revenue. Ultimately, you want to see the inverse of that or something like that, right? Where they can kind of stretch that further. And we met with a lot of great management folks this morning that I mean, they've only wrapped up kind of what is now like a mid-range round, and all of a sudden, it's like that's all the money that they need, right? And that'll take them to the finish line. And you're getting smarter management teams, grittier management teams, much more capital efficient management teams that are ultimately see the exit and work backwards from that, and it's actually working out quite well. And you'll see a big dichotomy between those companies and the ones that are have been met with a frostier reception in the IPO markets.
Yeah, and we've even this morning we met with a board member of we'll say a multiple cloud vendor, and I think they're trying to figure out where growth's going to come from. Is it organic or M&A? And as much as M&A and roll-ups are great, when you don't integrate those, they ultimately become unwound, right? And I think that's something where a lot of companies today, especially when you think about the multiple cloud environment, where everything's heading, you're going to have so much more spending. But how do you monetize that the right way? And it's going to be a much more crowded landscape because you have a lot more going after, bags of money, which if you look from a market cap perspective today, the market cap of cloud players today, are more than basically all of NASDAQ 10 years ago. And I think it just speaks to, the landscape that we're seeing today. So, I think it's kind of like the intro said, I also want to have this interactive and try to have as much Q&A as possible because we want to be here to help answer some of your questions that maybe you don't see people from the Wall Street or the private equity or VC community as well. So maybe I'd stop there to see if there's any questions before we go on, just to make it interactive. And remember, there's no bad question, as Saeed once said. Okay, we can't answer all the questions at the same time. Now, the problem is we don't have enough mics for all the questions. So we have a question right over there. Andrew? Yeah.
I guess one of the questions that I've had just listening to the speakers, and I'd love to hear sort of how you guys see the private landscape developing is, I hear the term multi-cloud, all that stuff, and I'm thinking more complexity.
Mm-hmm.
And that doesn't necessarily lead to higher market caps. It actually might lead to problems in terms of how you value the company. So how do you think companies are tackling that, and how do you guys sort of see that in your space developing when you look at public companies? How are the public investors valuing companies that are tackling this complexity?
And that's a great question. I mean, I'll start. Look, it's probably one of the most complex investing environments that I can remember in my 2 decades doing this. Part of it is obviously just the backdrop in terms of a pretty normal, geopolitical landscape. Joking. But the other thing is it's trying to differentiate who are the pure plays and where the real growth's coming from. Because, if you just screen companies based on public cloud, multiple cloud infrastructure, you'll get more companies than you know what to do with. And I think investors are trying to make sure they're investing in the right companies from a growth perspective. And that's why when you talk about there's a big divisiveness in the public markets in terms of the AWS-driven theme versus the Azure GCP multiple cloud. So there's a view that if you're leveraged to Azure and GCP and let's call it non-AWS, more and more company investors are trying to identify companies that are from services, applications, to infrastructure leveraged to those themes. Because I can tell you right now, about 7 of every 10 major cloud deals that we see enterprise, AI-driven, heavy workloads are going to Azure versus AWS. Because now you're starting to compete in Microsoft's wheelhouse versus maybe 4 or 5 years ago with AWS. So I think that's a big point of differentiation. Maybe you could.
Yeah, Andrew, I would just say that, in terms of when we're talking about like where the pieces are going to move around the chessboard, I just think that, like, if you think about like the companies that are getting really funded really well right now, like the pattern recognition is that they take something that's very, like they take a pain point, they take something that's very difficult and they make it easy. It's as simple as that, right? And so ultimately, multi-cloud has translated into messier, more complex, right? And that trickles down into compliance and security and other issues, right? And so that's why you're seeing companies that are being acquired now or getting a lot of funding and that will win kind of in this game is that the companies that are kind of AI-driven CMPs that make all of a sudden managing something that's messy easier, right? Or compliance or security companies that make a real pain point, they alleviate that, right? And ultimately, if you think about one of the kind of the byproducts of multi-cloud is that it has democratized, has leveled the playing field, and what that has meant is that retention has gone down because in what was otherwise a high barrier to entry space, those barriers have been lowered, and so retention is the way to how you combat low retention is differentiation, right? And how incumbents will kind of catch up in this space is by buying their way to those differentiation avenues, and then ultimately kind of turning around and giving that to the end user, right? And so I think that was just a long-winded way of saying like the differentiation and the simplification and alleviation of those pain points, those are the companies that are going to win both on public and private.
But it's going to be acquisitions too. I mean, look, last year, private cloud, public guys buying private cloud. How many acquisitions? So let's do a show of hands. How many think it was more than 30? Raise your hand. Okay, consensus. So most think it was less than 30 in terms of public players buying private. Okay, so last year it was 48. Okay, now this year, do you think that's gone up or down? Let's just say up, yes? Up, okay. We're up to 82, and it's not even November. I think it just speaks to right now, you have public vendors with currency. You have 80 to 90 billion of private equity. The goal is right now, it's an arms race, consolidate it. Because if you miss out on this window of the next 12 to 18 months, that and $2 will get you a pretzel, around the block from the hotel outside. So the point is like, that's the big focus right now. It's about M&A, consolidating, clear winners. And it just speaks to, look at IBM, a company that I've known my whole career, never was going to do acquisitions, Ginny, and they were never going to do M&A. What did they finally do? Red Hat. They needed to have a horse in the race. Mm-hmm. And I think it just speaks to what's going on in this landscape. And ultimately, look at what Kurian's doing at GCP. Why did Google bring Kurian in? Kurian is an acquisition specialist. If there was a doctor of acquisitions, like a PhD, that's what he'd be. He went to GCP, that's the first thing they're going to do. Looker is just the first step. We continue to think GCP is going to do significant acquisitions down the road. And Microsoft is another one that we believe Nadella and everyone in Redmond, that's something where we can see them doing large acquisitions on cloud, because the goal is right now, Amazon won the first battle. The next battle, we do not believe they win. We believe it's Microsoft driven, it's Google, and there's probably 30 to 40 vendors that are going to play in that ecosystem. And I think that's something that I would just highlight in terms of a shift that's going on right now in the landscape.
Yeah, we think we've kind of beaten the point to death here, but their acquisitions, valuations, they're only going to increase, moving forward. And one thing I'll just say is, I really like supporting founders, and I think that like I said, founder teams, especially in this ecosystem, they're smarter, they're grittier, they're more capital efficient, and like ultimately, as a lot of the incumbents are caught more flat-footed, like you'll see a lot of those really, really smart people that get frustrated with those, being kind of shackled there, start more companies that kind of in these wheelhouses ultimately, with the vision of being acquired. And so, we talked about companies that will win out, and I think investors that you'll win out. Like, there's going to be a shaking out of smart and dumb money, right? And so the smart money that's going to win is the ones who can, for those of you operators, like the ones who can add a lot of value even before writing a check. So introduce enterprise clients, partners, management hires, like add a lot of value in addition to writing a check here. And the smart managers and the smart operators are the ones who can actually tell the difference between the good and bad investors. And ultimately, you'll just see a lot of the cream rise into the top here.
Yeah, and to that point, I mean, look, I spend a lot of time at user conferences, all the time, and there's a big theme at these user conferences when you talk to CISOs, CIOs, CTOs. You're also seeing much more intelligent buyers in this next phase of cloud. And what I'm seeing is you're seeing pricing and negotiation get a lot fiercer. Mm-hmm. The average cloud bake-off, multiple cloud, if I go back a year ago, you had 3 to 4 vendors in every multiple cloud bake-off that we saw. And I would define multiple cloud as any enterprise moving to a multiple cloud environment. Today it's 9 to 10 vendors. And I think it just shows there's been a shift, a step up. And I think you're seeing much smarter purchasing behavior. And we're seeing prices, we're seeing average discounting on deals go from about 15% to 30% in this last year. And it speaks to, I think, this new landscape that we're seeing. Massive growth, but coming with that is also competition. So are there any other questions? Yeah. Yeah.
So what I'm seeing is, again, like to Andre's point about, I'm seeing, just the early innings of kind of AI-driven cloud management platforms. I'm seeing ones that kind of alleviate the pain points in kind of compliance. I'm seeing a lot in security right now, and so those are, I'm sure there's a lot that I'm missing, but from my vantage point in the Valley, like those are, a lot of the top areas that I'm seeing.
Yeah, to me, it's security. Yeah. I think that's the one. I mean, because right now, as you're having this massive shift, you're seeing gaps on the security side, and I think that's where you're seeing really a revolution go on in cybersecurity. For many years, you just had Cisco, Checkpoint, Palo Alto. You go to RSA Security, you see 2,000 vendors. They all sound like they do the same thing, and really, they had minimal market share. Today, you have companies like Zscaler, CrowdStrike. You got companies like Cyber. You have next gen companies. You have Palo Alto. When the cache running, it obviously comes from Google, acquiring basically any cloud-driven security acquisition out there. And I think it just shows what's happening on the security side, where the multiple cloud environment is causing gaps. Mm-hmm. And the last thing that anyone could get if you're a CIO is to have any sort of security breach on a cloud-driven initiative.
Yeah, and I look at it this way, right? I'm kind of on the other side of the fence, but I'll just say, if you look at the acquisition track records, I mean, it's been, if you look at, Microsoft and Palo Alto and, and some of the other folks, that's kind of largely in line with a lot of their acquisitions. And then all, especially in security, I'm seeing, security rounds of, pre-Series A that are already, 5 times oversubscribed. And so acquirers, investors, and everything in between, they're clamoring to get a spot on that game of musical chairs, and I see that kind of continuing.
Yeah, I mean, to put numbers around it, IT spending's 3%. We're anticipating, based on our forecast, cloud spending next year is 21%, 7x IT spend. So right now, if you're a vendor, you're going after that. That's where you're focused on. Are you going to be focused on traditional infrastructure, traditional purchasing? So I think that's a big theme that's going on. If you look at just the stepped up growth in cloud versus traditional IT, it's so outsized. And I think that's a theme that's going to actually, that fork in the road is going to continue to stretch. Especially when you get to 5G going to 2020, 2021, you're going to see multiple cloud environments and an IT spending environment shift to next gen versus legacy. And I think that's something that's an investing theme, both from the public and private side, that's going to be pretty pronounced.
And the last thing I'll say there is that, like if you look at, and Peter Thiel has this thing where he talks about, the difference in like round over round value increases in valuation for private companies, and the companies that increase, like have the greatest step ups in valuation, they tend to actually grow into those valuations. And so if you look at kind of the multiple, like growth multiple on kind of overall spend, like it's not a coincidence that you're starting to see greater step ups in the valuation of a lot of private companies in that wheelhouse. And again, it's believable because if like the TAM, the overall TAM is expanding at that clip, then you ultimately see companies growing into valuations at a similar clip as well.
Yeah, and I'll just continue. I mean, I'll just leave everyone with like the numbers, like 30%. 30% of workloads are on the cloud today in terms of what I view as a hybrid environment. It's going to 55% next 3 years. So, and when you think about that step up, it's only been the first phase of cloud, which has been really an AWS-driven phase. The next phase is multiple cloud. And I think you're going to have many more winners. And I think from a public as well as on a private side, that's what everyone's trying to figure out in terms of who are the winners and who are the losers. And these are things that are even under the radar on Magic Quadrants and things like that. I think we're just in the first sort of the early stages of this playing out, which in an investing landscape where you're clamoring for growth, cloud continues to kind of be the recipe that everyone's looking at here. So I know our time's coming to an end. I just appreciate everyone coming just to listen to us. And you know, obviously you could reach us on LinkedIn or email if any follow-up questions.
Yeah, thanks everyone. Really appreciate the time.